It's Wednesday, which means it's time for First Look, our unboxing series where we take something which isn't in a box and we take it out of a metaphorical box to take a look at it, and then, well, we don't put it back in the box because we can't, because there is no box. Today we're looking at Pylon Protocol, which is a yield direction protocol built on Terra, why you would want this, what you can do with it, and who might want to use it. Well, that's all coming up after this word from our sponsors.
Don't let high gas costs keep you out of Ethereum. The balance of the gas-optimized Vault architecture makes trading cheaper than anywhere else. Liquidity providers can optimize their fee earnings using the dynamic fee system that automatically adjusts to market conditions. You can also use asset managers to lend out idle assets, dramatically increasing your capital efficiency. Because Balancer is an open platform for flexible, automated markets, you can choose from stable pools or weighted pools, and in the future, more designs will be created that we don't even know about yet. Check it out at balancer.fi.
So Pylon Protocol is built on Terra, and Terra is a DeFi-focused ecosystem, so they can do some pretty funky things with yield redirection. Now, we've looked at the likes of Pendle and Alchemix in the past. Those are built on Ethereum, but effectively, it's a game of capital efficiency. How can we take capital and do some funky things with it that benefits not just the people who are depositing the capital, but also the people who are receiving the capital? So Pylon, it does a really simple thing. It leverages Anchor and its 20% interest rate to do things which wouldn't be possible elsewhere. So if I, for instance, as an investor, want to invest in something, I can deposit UST into that investment, and that deposit is protected. I will never lose that deposit. I can withdraw it at a certain point in time, but I'm making a commitment to my investment. And in return for that, I will receive whatever I'm investing into decides is a fit reward. In return, the project that I'm investing into, or whatever it might be, it could be a creator, it could be a product, it could be anything really, they get the benefit of all the yields that will be generated by that capital. So you put UST in, and presumably, if they do a good campaign, they'll gather up a whole bunch of UST, and that will generate yield. They can have that yield. I say, okay, fine, you have my yield, but in return, I want, and whatever that is determined by whoever you're investing into. Now, this feels a little bit like Kickstarter, and it kind of is in a way. But if you think about how crowd loans work on Kusama and Polkadot, for instance, you supply capital, that is your right, and the project earns the right to bid for a parachain, and then in return, you get a bunch of tokens. So the opportunity cost of that capital is compensated in tokens, and you would expect the same thing to happen here on Pylon, but it really depends on the protocol, on the product, whatever it is you're investing in. As they say, deposit money, spend yields, make lossless investments, access no fee services, your base capital is untouched. So the way they imagine this going is, for instance, with the Defiant, we have a subscription service. Now imagine, instead of you just paying an upfront ETH fee, instead we said, okay, the cost of membership is X, and that can be factored by the yield on a deposit that you give us. Now, we would then accept a deposit in UST, and then we, as the Defiant, would factor the cost of membership as not the fee itself, but as the interest that's earned on that fee. So upfront cost, maybe a little more, but over the period of time, then it ends up being relatively cheap. And of course, you, as the person who's taken out the subscription, can withdraw your principal at any time, and you haven't lost it, which is interesting, do you not think? So that's one way of doing it. There was a Medium post where they kind of outlined the potential users of this, but there were 4 use cases. So they said sellers of future value or unascertained goods like early stage startups, where you're bootstrapping liquidity, you're bootstrapping funding. That makes sense. Sellers of intangible value, so artists, musicians, live streamers, content creators, they may struggle to monetize their creative content offerings and receive steady payouts that reflect fan base growth over time. That's the example of the Defiant. So we could switch up the way we do things. We could say no more sponsors. We could say no more ad revenue on YouTube. We just do it via acquiring more and more people to stake UST in us, could be kind of interesting. We have sellers of recurring value, so content IP, SaaS software, subscription-based services may need to rely on discounts to fair value to reduce churn. And then the fourth example is lenders of illiquid assets like real estate, cars, luxury items. They may lack a venue to securely lease their assets over time and be provided with proper recourse for contract violations. So you could say, for instance, the cost of renting an item would be X, and that's represented by the yield, but also the penalty for damage to an item or loss of an item is fairly compensated by the actual deposit itself. Kind of interesting. So some really interesting ways of using Pylon to fund things. I've often thought about the way I might use Alchemix to fund a film. I could see myself funding a film using Pylon because what's so great about it is the people investing never lose money. There's benefits, there's opportunity cost, yes, but they don't lose actual money. So the question for an investor is to decide whether the value of getting new tokens or the value of investing in something outweighs the opportunity cost and the lost yield that they would normally expect to receive on UST. So really interesting. The most kind of the first product that they've launched on Pylon is Pylon Gateway, and this is basically a project launch pad, a crowdfunding platform. And there are 3 projects live on there at the moment. There's Loop, which is a decentralized exchange. There's Mine, which is the Pylon Protocol native token itself. So they funded themselves through there. And if you go on the main Pylon Protocol page, go to the web app, I think yes, you can basically farm their native token Mine. I definitely recommend looking at the documentation just to get a bit more insight. I mean, there's not a huge amount more than you would find on that Medium article, but some interesting things about the Pylon governance token as well, and how they're going to use that. And if we look back at Pylon Gateway, looking down further, upcoming is Nebula Protocol, which is it's a protocol for basically building indexes like Index Coop does, which I think will be a really interesting product on the Terra ecosystem. And then there's Valkyrie Protocol coming out, which is a decentralized rewardable ecosystem. The one I liked up though was Terra World. And it's the first Terra metaverse for work service, providing a remote work environment for businesses. Users can own NFT land and buildings with the TWD token. Doesn't that not feel like a COVID-powered vision of the world? But wow. So pool 1 here, you got 30% APR, 18-month vesting. That's kind of interesting. So you can participate in these by depositing UST via Pylon, different levels of incentives for you to do so, and there you go. So that is Pylon. I'm sure that if we started to see influencers or creators start to build this into what they do, for instance, at the Defiant, we could easily set up a business model that would make sense for us on Terra using Pylon, and I think it might be something that we end up looking at. Not sure, but definitely something to consider, and that is Pylon. I'm a big fan, I'll be honest, of yield redirection and capital efficiency protocols because it just feels like it's a fair deal for both sides of the equation, and that's hard to come by. So that was Pylon Protocol. As always, if you have a suggestion for us to unbox, to unpack in our virtual boxes and unpacking warehouses, then drop them in the comments below. Drop us a like, subscribe if you are not subscribed already. If you're not, why not? We're on our way to 100,000 subscribers. We need your help to get there. And once we do, we will have one hell of a party. There will be some things dropping. And for this week, we are covering Terra, but that's it for now. See you on the next one. Peace!